Hi everyone, and welcome back to another Patreon video. Today's Patreon video is going to be about CRV curve, but there's also a lot of other coins that look like this that we've been calling for these zones to the downside. So I'm going to use curve as an example here, but it can be really used on any altcoin that you're looking at. When you've got wave structures like this of a nice curvy wave to the upside. And people asked over the last couple of weeks why I had this zone marked out, and there's a couple of different reasons really. It is the last cluster of consolidation before the big major move to the upside. And in addition to that, when we start to look at the trend-based Fibonacci, and we're looking at waves to potentially come to the downside, we've got our 1-to-1 extension at about the 0.46 zone. So about 46 cents, which just so happens to coincidentally align with the bottom of those wave structures there. Okay, so now we've begun here in a capitulative mode for curve. I do believe it's a capitulation move, or in the middle of the capitulation move. These types of moves, they happen quick, and when the bounce comes it happens fast. But one thing that I want to point out here is when we're looking for kind of these lows to get taken, you're going to have a couple of different things transpire. What I expect to happen here on a couple of these different altcoins is you're going to get a first fake bounce, and likely it goes in to take out the early longs. And it'll go in for that zone about 0.46, 0.47, and at this point again you get that second fake bounce, but really all it's creating here is like a 1-2 ending wave 3, and that's just a big expanding flat wave 4. And then it actually goes in for 5 waves. It's very similar to what we saw in H-bar at the absolute bottom of the market. Go back and study that H-bar market structure when I was tweeting out the buys for H-bar. So all we need to be on the watch out for now is watch out for the first fake bounced, because you're going to get early longs entering the market here. They're not going to skim off profits there, they'll get taken out, and then as the market pumps back up they'll start to think, oh no, I missed my opportunity, let me wait for a pullback to enter. They'll enter here again, and it's just on the first wave of the 5 waves to the downside. So when we start to see these waves transpire on the lower time frame, this is not to time scale guys, it could be but it's not really to time scale. All we need to do is be watching out for where that 4th wave correction comes back up to, and if it's something like that, we look for the 1-to-1 extension, and realistically people's stop losses are likely to be in this region, and that's when we can start to pinpoint some entries on some leveraged trades. But when the market is in attack mode, we need to wait and then retaliate at the right moment. The market is hunting at the minute, it's hunting stop losses, it's been in a chop zone, Bitcoin's been in a chop zone. People don't know how to play these ranges, and they'll enter blindly positions and they'll get liquidated, and after so many liquidations they stop entering before the actual real bounce of the market commences. So yeah, psychologically I would expect something like this, an expanding flat to come to fruition to build a bit of hope again before the final kill 5 waves, and on a lower time frame we'll be monitoring that with the trend based fibs. And of course if we get a little range set here, we'll also be looking for the negative Fibonacci confluence as well. So when we're looking at entries on coins like this on curve, I also mentioned a couple on sand and a couple of different other coins. When you've got structures like this guys, there is opportunities awaiting, big opportunities, because if you can really get close to them bottoms with some leverage, you can really hold out for the real trade. But what people are going to be doing at the minute is they're going to be looking for that trade, they're going to be looking for that instant profit that they want that instant bounce back from the market. So expect something like this. Expect the final kill and sentiment to be here, even worse than it is here, and at that point, you know, we'll look for the trend line manipulation. Maybe we start here with a trend line and we'll look for that fake bounce here, look for that final kill, the trend line manipulation, 1, 2, 3. By the time it breaks through that Fed test, hitting that 1-to-1 extension, people give up in the market for the market to actually bounce to the upside, because at this point they will think it's a fake bounce and that they should just short again. and that provides the fuel to the fire for the actual move back to the upside. So if we take the fibs from the high to the actual potential low, we'd then be looking for the 61% to 75% region. Also aligns, that 261% region as well of the actual fibs to the downside. So a little bit of working out to do here on the market. A lot of people will start calling this a descending structure, and then when they see that break at the bottom, they'll say, oh no, we're giving up, this is it, the market's cooked, we're absolutely over, panicking, McDonald's hats back out. Yeah, and then we start to see the real bounce. So watch out for this on the lower time frame. A couple of fake bounces, the early longs to get wiped, because it's natural when you've been in the market to want to see waves like this to start to enter trades, but people get caught out by the expanding flats and then the actual 5-wave correction that you're looking for. So yeah, a little bit of a wave structure to be playing out here at the bottom of the market, and maybe it coincides with BTC dominance going up a little bit further, or Bitcoin consolidating or going in for a further drive to that 95-94 region. It's just something that we need to monitor as time goes on, and really look to attack the market when the market is out of the fuel. When the market is eaten, think of these as the market makers. Market makers attacking the hunts, hunting, attacking, getting their food. Once they're fed, it can bounce. The feeding, it's a weird way to look at it, but usually that 1, 2, 3 psychological drives to the downside is enough to make people give up and start to short. The market makers are fed on the longs, they're full up, so they can expend that energy and go for an automatic rally in the market. Yeah, a little bit of a weird analogy there, guys, I do understand. But yeah, just take it easy. It's not financial advice. Hopefully this type of wave structure to be expecting at the bottom of the market is helpful. Like I say, it's curve. It doesn't have to be curve that you're analysing. There's a lot of coins that look like this. There is also coins that look more so like they've done a move to the upside, and they've kind of created a range that they actually went out and taken the highs. So look for the range lows to coincide with potentially coins of like curve with this wave structure, take these lows at that time. Maybe the coins that are still in that range to the upside that have taken them highs again, maybe just look for them to come in and take them lows, and look for that same type of wave structure at the downside with that fake expanding flat first bounce with the 5 waves. People call it resistance and expecting more downside, and then the market bounces. Just sit back, relax, let the market do the work, and take it easy.